Indonesia's presidential and parliamentary elections are over. The pair of Prabowo Subianto and Gibran Rakabuming are likely to be the president and vice president for the next term starting in October. They have won with a convincing majority. According to quick counts, Prabowo Subianto has garnered 58% of the vote. His opponents, Anies Baswedan and Ganjar Pranowo, have yet to concede defeat, and they said that they will wait for the official results, which will come out by the 20th of March. Given the large margin of victory, we think that it is unlikely that the election outcome will be dramatically changed. So Prabowo Subianto is still likely to be the next president of Indonesia. What does this mean for Indonesia in terms of policy going forward? Prabowo's path to presidency was not without controversy. In October, he nominated President Jokowi's eldest son, Gibran Rakabuming Raka, to be his vice president running mate. The Constitutional Court had to amend a law in order for Gibran to be allowed to run for the vice presidential post. As a result, Prabowo and Gibran got the implicit backing of incumbent President Joko Widodo. President Joko Widodo remains hugely popular in Indonesia, and his support bumped up Prabowo's candidacy prospects. As such, we now stand at the cusp of a Prabowo presidency. What does that really mean? Coming back to this crucial question is important for us as we look at the macroeconomic outlook for this year as well as for the rest of the Prabowo presidency. Specifically for this year, we do expect growth to remain on the weaker side at 4.8% year-on-year compared to 5% in 2023. The reasons we expect growth to be slightly weaker is, first, we expect commodity tailwinds to fade. Second, we expect that investors will still remain on the sidelines to judge exactly how much policy continuity will actually figure in the Prabowo-Gibran presidential regime. Furthermore, the election boost to growth in Q1 will fade as we go into the rest of the year, and as such, household consumption, which is usually where the boost is manifested, will remain on the weaker side as well. Beyond the growth outlook for this year, we think that there are some crucial questions that we need to be asking ourselves. First off, is Prabowo really a policy continuity candidate? To answer that question, I would take a slightly longer term approach. I think that Prabowo will be a policy continuity candidate for certain policies that have worked for President Jokowi. These include spending on infrastructure, the downstreaming policy, as well as the shifting of the national capital to Nusantara. The latter hasn't really worked for President Jokowi, but it's been one of his key projects, and I think Prabowo might continue with that one. But Prabowo has also indicated that he is very clearly focused on boosting social assistance spending. The type and form of social assistance spending that eventually manifests will be very important to the nature of growth that we see in the years of the Prabowo presidency. As such, I think that growth will be supported by expansionary fiscal policy under President Prabowo, and he has already indicated that he is willing to expand the fiscal deficit, more importantly the public debt to GDP ratio, to 50% from the 38% currently. The policies that he adopts in order to increase the deficit will be crucial to watch, and like we mentioned, it's most likely going to be on social assistance spending, which is something that he has been saying throughout his campaign. He has also promised to increase the revenue to GDP ratio to about 23% from the current 10 to 11%. And that is a huge leap, which means that there could be new taxations and new laws in the pipeline. Finally, it also remains to be seen if he will go ahead with subsidy rationalization. At this point, it is actually low-hanging fruit in our view because global oil prices remain low, and linking retail fuel prices to global oil prices could be less of a challenge at this point than it has been in the past when Brent prices have averaged above $100 per barrel. As such, we remain relatively optimistic that Indonesia will achieve the 5% growth handle over the medium term. It remains an attractive destination for FDI. However, policies under President Prabowo remain to be seen. The first test of the Prabowo presidency will be his selection of the cabinet, and particularly the finance minister, the state-owned enterprise minister, the Minister for Economic Coordination. Technocratic appointments to these roles will significantly boost his credibility as the president. We do expect that Prabowo will maintain the institutional sanctity of all key institutions, including Bank Indonesia. Bank Indonesia will continue to be mindful of inflationary, external, as well as growth pressures. With GDP growth slowing this year, as well as inflationary pressures remaining well contained, we expect Bank Indonesia to deliver a cumulative 125 basis points in rate cuts. Of course, the big elephant in the room is actually when and by how much will the US Federal Reserve cut its policy rate. Our house view is for the US Fed to cut its policy rate by 100 basis points starting in the second quarter of this year. Given that Indonesia's policy rate is at 6% and inflation currently has printed 2.6% in January of this year, we see a larger room for Indonesia to lower its policy rate compared to other regional peers. As such, we have an aggressive rate cut forecast starting from June this year, but a lot of it is dependent on IDR stability. The dollar IDR rate and generally IDR depreciation pressures have become a crucial part of Bank Indonesia's reaction function. Maintaining IDR stability is crucial to Bank Indonesia, and it has stated so many times in the past. Our rate cut forecast therefore hinges on a softer dollar view, as well as dollar IDR remaining relatively stable with IDR depreciation risks staying contained. IDR depreciation risks intensify, there is a risk that BI could cut by less rather than more. So to summarize, political uncertainty has cleared. The next president of Indonesia is likely to be Prabowo Subianto, and his vice president is likely to be Gibran Rakabuming. The policies that this pair adopt remain to be seen. There is a strong sense that this was the best pair for policy continuity to push forward President Joko Widodo's policies. We do think that there will be some policy continuity, especially on key policies that have worked for President Jokowi. However, it remains to be seen what stamp President Prabowo will put for his own term in office. We think that the stamp is likely to be higher social assistance spending, possibly more taxation, and a slightly more expansionary fiscal policy. In terms of growth, we expect GDP growth to be weaker this year at 4.8% versus 5% last year. We expect that through the Prabowo presidency, GDP growth will average about 5 to 5.2%. And to push growth beyond this 5.2% handle, significant reforms will need to be implemented. In terms of inflation, we see the inflationary picture as well contained, and inflation is relatively well managed. There are, however, risks to inflation. First off, from domestic policy, if the government chooses to rationalize fuel subsidies, there could be higher inflationary pressure. At the same time, from the external front, risks remain from volatile oil prices as well as geopolitical risks. Notwithstanding, our forecast is for Bank Indonesia to cut its policy rate by 125 basis points this year, provided that IDR depreciation risks remain well contained.